Did you know that while the entire retail market has been panicking and dumping shares, NIO just quietly pulled off the strongest operational quarter in its entire history? Today is July 2nd, 2026. And here's the thing, nobody wants to admit, everyone is selling this stock right now. But smart money, the whales, the institutions, the funds that move billions, they're quietly buying. If you only looked at the stock price over the last month, you'd swear this company was in a death spiral. But if you look at the raw data, the deliveries, the institutional movements, and a massive upcoming catalyst that almost nobody is talking about, you'll see a completely different story. This is a classic case of market irrationality versus flawless execution. And by the end of this video, you'll understand exactly why the smartest investors on the planet are loading up while everyone else runs for the exits. Now, before we dive in, if you want more institutional grade breakdowns like this one, do me a quick favor and hit that subscribe button. It genuinely helps the channel, and it's completely free. All right, let's get into it. But to understand why the market is so disconnected from reality, we first have to look at the mask that's currently hiding all of this growth. Over the last 30 days, NIO has tracked its worst performance of 2026, sliding nearly 17%. On paper, that looks like a genuine disaster. For the average investor, it's a screaming reason to run for cover. But for the disciplined investor, this is what we call noise. Because while the price was bleeding, NIO was quietly transforming into an execution powerhouse, dominating the premium electric vehicle market in China with a level of consistency we simply haven't seen from them before. They aren't just selling cars anymore. They are capturing the highest margin segments of the largest EV market on Earth. So ask yourself this. What are the odds that a company posting record numbers stays this cheap forever? Pretty slim, right? Because if we dig deeper into the actual numbers from this so-called terrible month, the entire narrative flips completely on its head. NIO just dropped their June and second quarter delivery results, and the numbers are, frankly, staggering. They delivered 40,597 vehicles in June alone. That is a 62.9% increase year over year. Just think about that scale for a second. And for the full second quarter, they hit 107,658 deliveries, up nearly 50% from last year. This isn't just a recovery. This is explosive, sustained growth. While other manufacturers are drowning in cooling demand, NIO is accelerating, proving that their battery swapping ecosystem and premium branding have built a massive competitive moat that rivals simply cannot cross. Now, deliveries are impressive on their own, but the mix of what they're actually selling is even more important for the bottom line. Because NIO is winning exactly where it matters most, high-margin SUVs. Their new ES9 achieved a record 10,000 deliveries within its very first 30 days on the market. Let that sink in. At the same time, the all-new ES8 has crossed 120,000 cumulative deliveries, cementing its absolute lead in the premium segment for vehicles priced above 400,000 yuan. Why does this matter so much? Because these are the exact vehicles that generate the cash flow needed to reach profitability. NIO isn't just moving units off a lot. They are dominating the luxury tier. And here's a question worth asking. How often does a company lead the ultra-premium market and still trade like it's going bankrupt? Almost never. And while the premium tier is their bread and butter, there is a hidden growth engine that is about to capture the rest of the market entirely. Because NIO is no longer a one-trick pony. Their multi-brand strategy is finally firing on all cylinders. In June, their mainstream brand, Envo, contributed over 11,000 vehicles. Meanwhile, their accessible brand, Firefly, added nearly 7,000 more. This tiered approach allows NIO to capture every single demographic, from the budget-conscious first-time buyer all the way up to the ultra-luxury executive. It's a beautifully balanced ecosystem that protects them from any localized market shifts. When one segment cools, another heats up. That's not luck. That's strategy. Now, you might be wondering, if the numbers are genuinely this good, then why on earth isn't this stock already trading at $20? The answer lies entirely in who is buying versus who is selling. Because while retail sentiment has been shaky and emotional, the smart money is aggressively moving in. Recent filings reveal that 196 total institutions added to their NIO positions in the first quarter. And look at these numbers closely. D.E. Shaw & Company increased their stake by 248%, adding 34 million shares. Two Sigma went even further, with a jaw-dropping 1,863% increase. Even JPM Morgan Chase added over 9 million shares. These are not meme stock gamblers chasing hype on social media. These are the most sophisticated quantitative and fundamental funds on the entire planet, and they are buying this sub $5 dip with both hands. So the real question becomes, do you trust the panicking crowd or the people who manage the world's money? But are they actually right to be buying? Let's look at what the cold, hard valuation models truly say about the fair price. Because by almost every metric imaginable, NIO is severely undervalued. Wall Street consensus currently carries a price target of $6.80, representing nearly 37% upside from here. More aggressive models, like those from Freedom Capital, see it climbing all the way to $7. But here is the real kicker. NIO is currently trading at a price-to-sales ratio of just 0.8 times. Now compare that to the industry peer average of 1.9 times. Essentially, you are getting one of the fastest growing EV companies in the entire world for less than half the price of its competitors. And that is precisely why Zacks recently handed it a rank number 2 buy rating. Tell me, how often does the market hand you a discount like that on a genuine market leader? The valuation is clearly there, but every great stock needs a spark to ignite a rally. And NIO doesn't just have one spark, it has 3. The biggest catalyst that almost nobody is talking about is the Hong Kong primary listing upgrade. Right now, NIO holds a secondary listing, but by upgrading to a full primary listing, they become eligible for Stock Connect. And this is absolutely massive because it swings open the doors for millions of mainland Chinese retail investors to buy this stock directly. We are talking about a colossal influx of local liquidity from people who understand this brand better than anyone sitting in New York or London ever could. This is a primary re-rating event just waiting to happen. Imagine an entire ocean of new buyers suddenly gaining access to a stock this undervalued. What do you think happens to the price then? But liquidity is only part of the equation. We also need to see a clear, credible path to actual profit. And NIO is finally solving its efficiency problem head-on. Their AI-enabled F2 factory was recently recognized by the World Economic Forum as a global lighthouse, one of the most advanced manufacturing facilities on the planet. By using cutting-edge AI to lower unit costs and dramatically shorten production cycles, NIO is fast-tracking its path to 2027 break-even. Analysts are now openly projecting a profit of 1 billion yuan by then. The old cash burn narrative is dying a quiet death, and the profit machine narrative is being born right before our eyes. And here's the best part. We don't have to wait years for the next catalyst. One is happening in exactly 1 week. Mark your calendars for July 9th. That is the official launch of the 5-seat ES8. This model targets the high-margin, premium large SUV market, a segment where NIO already commands a dominant reputation. This isn't just another routine car launch. It is an immediate catalyst for revenue expansion and margin improvement across the second half of the year. And if the pre-orders are any indication of demand, this could very well be the checkmate move for the third quarter numbers. Now imagine all 3 of these catalysts landing within the same window. What are the chances the market keeps ignoring a company firing on every cylinder at once? So the fundamentals are rock solid and the catalysts are all lined up perfectly. But what does the chart itself actually tell us about when to buy? Technically speaking, NIO is forming a textbook rounding bottom, a classic accumulation base. And despite that minor 3% slide right after the second quarter report, the MACD indicator clearly shows that downside pressure is easing significantly. We have a very clear support floor sitting at $4.70, and that is our make-or-break zone. The ideal accumulation entry is right here, between $4.85 and $4.95. If you can secure shares inside this zone, you are quite literally buying alongside the institutions, right at the base of the next major move. But there is a wall we need to break through first, and that wall is heavily guarded by a whole lot of short sellers. Because there is a massive psychological wall sitting right at $5. Currently, there's an options magnet with over 20,000 call contracts parked right at that strike price. And here is where it gets truly interesting. Short interest is sitting at 5.88% of the float. That's 134 million shares sold short. With a days to cover reading of 5.91, any decisive break above $5, likely triggered by that July 9th launch, could spring a genuine liquidity trap. Short sellers would be forced to cover their positions, potentially sparking a violent move to the upside as they scramble desperately for shares. Picture that scenario for a moment. A stock this cheap, with catalysts this strong, suddenly forcing the shorts to run. How high could that actually go? So how do we actually play this the right way? Here is the exact blueprint. For the short-term squeeze play, We are looking at an entry around $4.90 with a target of $5.20 to $5.50. Set your stop loss at $4.60 to protect your capital no matter what. The driver here is the ES8 launch combined with that $5 breakout. And for the long-term accumulation play, honestly, anything under $5 is a gift. Our legacy target is $12, with a measured move target of $16 and beyond, as the Hong Kong listing and 2027 profitability come sharply into focus. This is a generational buying opportunity for a company that is finally executing flawlessly on its vision. And when you put every single piece of this together, the full picture becomes crystal clear. NIO is sitting at the center of what I call a checkmate convergence. You have record-breaking operational execution, you have massive institutional accumulation from the biggest whales in the game, and you have three major macro catalysts all hitting at nearly the exact same time. The market is genuinely handing you a chance to buy a premium, high-growth leader at a deep discount, purely because of temporary, emotional price action. This is the generational accumulation zone, and the data simply does not lie. NIO is a strong buy for anyone with the patience to see past 30 days of meaningless noise. But before you rush out and make your move, remember the single golden rule of the markets. This entire analysis is for educational and informational purposes only, and it's based strictly on the data available as of July 2nd, 2026. I am not a financial advisor, and nothing in this video should be taken as personalized financial advice. Every investment carries real risk, including the potential loss of your capital. Always do your own thorough due diligence and consult with a licensed professional before making any investment decision whatsoever. Now I want to hear from you. Here's my question. If you had to bet, do you think NIO breaks above $5 before the end of this quarter? Or does the market stay irrational a little longer? Drop your honest prediction in the comments below, because I read every single one, and I genuinely love seeing where you all stand. If this deep dive brought you real value today, smash that like button. It truly helps push this analysis to more investors. And if you're not subscribed yet, fix that right now so you never miss the next institutional grade breakdown. Thanks so much for watching, and I'll see you in the very next one.